This video is for educational purposes only and is not investment advice. Please consult a financial advisor before making any decisions.
Okay, let's just dive straight in. The market is flashing some serious warning signs right now. I'm talking about the VIX, the market's fear gauge. It just shot up to 26.86. Now, to put that in perspective, anything over 20 means investors are getting pretty nervous. So yeah, this is a pretty clear signal that panic is starting to creep in.
And right on cue, just as that fear is peaking, we get this bombshell dropped on the economy. The U.S. didn't just add fewer jobs, it actually lost 92,000 of them. I mean, that's a total miss from the forecast and a massive red flag for where things are headed. And to make it a perfect trifecta of bad news, right? We've got geopolitical tensions sending oil prices through the roof. Brent crude has now set up shop at a new floor of $90 a barrel. That is the last thing you want to see when the economy's already on shaky ground.
So what in the world is going on? And more importantly, what's the game plan here? How do you even navigate this? Let's break this whole perfect storm down piece by piece. What we're looking at here in 2026, this is a really rare and frankly dangerous situation. This isn't just one crisis we're dealing with. It's like 3 different problems all hitting us at the exact same time, and they're all feeding off each other. It's a total mess. And at the heart of this whole thing is a word that should send a shiver down your spine: stagflation. I mean, this is the one scenario that absolutely terrifies central bankers, and for good reason. It basically traps them. There are no good moves left on the chessboard. And this right here perfectly shows you the trap the Fed is in. They've got 2 huge problems pulling them in opposite directions. On one hand, inflation is still way too high at 3.1%. But on the other, the job market is starting to crack, with unemployment creeping up. So what do? If they cut rates to help out jobs, inflation could just explode. But if they keep rates high to fight inflation, well, they could send us into a really deep recession. See? They're stuck between a rock and a hard place. It makes their next move incredibly unpredictable and kind of scary. Okay, now this is fascinating. Look at this chart. It shows you how different shocks affect the market. A regular geopolitical event, the market bounces back in about 42 days. Not too bad. But look what happens when you throw oil into the mix. That recovery time just balloons out to 187 days. It completely changes the game.
And this table here really hammers the point home. You see the Cuban Missile Crisis? Terrifying, right? But the market was back on its feet in 17 days. Now compare that to when Iraq invaded Kuwait and messed with the oil supply. The market tanked almost 18%, and it took more than 6 months to claw its way back. The lesson here is crystal clear. When conflicts involve energy, the pain for investors is much, much worse and lasts way longer.
All right, so if that wasn't enough, let's add another layer to this. While all this big picture, macro stuff is going haywire, the tech sector's having its own meltdown. Some people are even calling it the SaaS apocalypse, a total crisis for software companies. And I mean, just look at these numbers. It's absolute carnage. We're talking about $1 trillion just gone, wiped from their value of these software stocks. Even the giants, Salesforce, Adobe, they're getting hammered. And why? Because generative AI is posing a direct threat to their entire business model. And listen, you've got to understand, this is not like the tech downturns we've seen before. Back in 2016, that was just a cyclical thing. Companies tightened their belts for a bit. This is a fundamental structural shift. AI agents can now do the work that used to require dozens of people. So why would a company pay for hundreds of software licenses? This isn't just a dip. It feels like a permanent change in how software is even valued.
So, okay, we've got this totally new, kind of hostile environment, right? Stagflation, geopolitical conflict, massive tech disruption. The old playbook, the old strategies, they're officially broken. Just throw them out. I'm talking about the classic 60-40 portfolio. 60% stocks, 40% bonds. That whole strategy is built on one simple idea. When stocks go down, bonds go up. But in a stagflation shock, that relationship completely breaks down. Suddenly, stocks and bonds can fall at the same time, and you're left with absolutely nowhere to hide.
So this kind of market demands a completely different way of thinking. And the strategy that's really starting to gain traction for this specific type of chaos is something called the barbell portfolio.
Now, the concept is actually pretty simple, but it's really powerful. You basically avoid everything in the mushy, vulnerable middle of the market. Instead, you put your money at 2 opposite ends of the spectrum. On one side, you build a super defensive anchor with stuff that does well in this kind of environment. Think energy, defense, maybe some gold.
Then, on the other extreme, you make a few really concentrated bets on the elite AI giants. The Microsofts, the Alphabets, the guys with tons of cash who are literally building the future.
Okay, so with all this chaos, you get one thing for sure: massive volatility. The market is swinging all over the place. Now that sounds scary, and it can be, but you can actually turn that volatility into an advantage. You can use it to generate income if you know the right strategies. One of the most popular strategies for this is called the wheel. It's basically a system for getting paid while you wait to buy great stocks at a discount. You start by selling what's called a cash-secured put. If the stock drops below the price you set, cool, you get to buy it at a cheaper price. But if it stays above your price, you just keep the cash, the premium, that someone paid you up front. It's a really smart way to turn all this market choppiness into your friend.
Here, let's walk through a quick example. Let's say Microsoft is trading at $400, but you think that's a little pricey. You'd rather buy it at $380. So you can sell a put option at that $380 price. And because volatility is so high, you might get paid a really fat premium, say $12. Now do the math. Your actual break-even price isn't $380 anymore. It's $368. That premium is like a huge safety cushion protecting you on the downside.
So what about protecting the stocks you already own? Normally, people would buy protective puts, but right now, with volatility this high, they're insanely expensive. It's like trying to buy fire insurance when your house is already on fire. A different approach people are using in this kind of choppy market is called an iron condor. It's a strategy where you actually collect money up front and you make a profit as long as the stock just bounces around in a range without making a huge move up or down, which, let's be honest, is what a lot of us expect in this kind of stagflationary environment.
All right, I know that was a ton of information. So let's just boil it down and recap the game plan for getting through 2026.
Okay, let's tie it all together. The big problem: we're in a perfect storm of stagflation and geopolitical messes. The big failure: your traditional 60-40 portfolio just isn't going to cut it. The new strategy: you adopt a barbell approach. You anchor yourself in defensive stuff like energy and defense, and you concentrate your growth bets in just a handful of the big AI winners. And the tactics? Use all this crazy volatility to your advantage by selling options premium, using strategies like the wheel and iron condors. This really is a total mindset shift. You can't just be passive anymore. You have to get tactical.
Look, there's no sugarcoating it. This is a tough environment. But for anyone who can understand these new rules and is willing to adapt their strategy, all this chaos actually creates a ton of opportunity. So the real question to ask yourself is this: in a market where everything seems to be breaking, is playing smart, tactical defense